The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. Got about 24 minutes to go until the starting bell. And we got markets in negative territory. Quite a rollover from yesterday afternoon. You're talking about almost 80 points from where we were at about 2:45 yesterday afternoon. Markets roll over, and you take a look at the volume, folks. The volume yesterday, let's go to the NASDAQ 100 first. NASDAQ 100, we're off by 1.2% right now. And yeah, look at this volume. Okay, yesterday's number, folks, 408,000 contracts. For some context here, you can't find a volume as low as that since February 10th, which was basically before all of the volatility. So it's the lowest volume day on record since the volatility from the highs began in the NASDAQ 100. And yeah, the writing was on the wall on Friday. Jobs Friday, you come in light. This market is lacking volume, lacking quality volume to the upside, man. We got volume to the downside. We'll see what today holds as we come into a Fed day tomorrow. So people getting their chips in order, right? Getting their ducks in order ahead of an important day tomorrow. And we'll see where we go. Dow off by 0.7 right now. The Russell off by about 1 percentage point as well. Bitcoin holding up relatively well. You're at 94,000 right now. Crude catching a bit off the lows. Look at that double low. Right, you reach a low of 55.30 on a 5-minute basis. We've charged higher to almost where we opened the futures on Sunday night. We're trading at 58.78 right now. Gold, look at that, right as I speak, 3,400. It's not stopping on gold, man. Gold, maybe we do have more of a leg. Look like we're going to be in a consolidation area. We'll see. What I will say is, look at the volume numbers again, right? Look at the volume of how you rip lower, and look at the volume and how you rip higher. Okay, now we had a lot going on those days, February 22nd, February 23rd, the 21st as well. You bring it over to yields, but the volume's not quite there just yet. Yields, chopping around a bit. We were sliding lower, we're barely higher, and right now, we get the 10-year right now at 4.33. 4.33, we're as low as about... We were pushing 4.36, but nonetheless, 4.33. Not bad when we were pushing 4.13 recently, but I was talking about the 21st, 22nd, and we get on over to the dollar. And as you see, not a huge reaction to gold. Now, there was your 21st and your 22nd, okay? As in, that's when gold was really ripping higher with volume. And yeah, we have a little bit of dollar weakness and gold catching a bid yet again. And it looks like this gold run is not over just yet. Pretty remarkable. We got dollar trading 99.50. We got the 10-year at 4.33, and we got gold making another run for 3,500 as we are above 3,400. 33.99 as we speak. You jump over to silver right now. Silver up about 80 pennies. You take a look at the daily on silver, though, still well below the highs we got in October, well below the highs we got on that spike high to begin April. And boy, when silver trades lower, watch out, right? You trade from 35 to 28. Folks, that would have been like gold moving from 3,500 to 2,800 on that low. Now, yeah, you got a lot of it back, but boy, silver, particularly volatile, to put it lightly. Excuse me. All right, let's jump around to the headlines, and that says it. U.S. stock futures drop on signs of trade war damage. I mean, what are you assigning to the volatility right now? There's so much out there, whether you're talking about the Fed, you're talking about tariffs, of course, that are ever looming. But yeah, we have companies reporting. We sure do, and we got a trade deficit. But that one, not too surprising. Trade deficit widens to a record $140.5 billion. How about that one? Yeah. Imports in March rose 4.4% to $419 billion. Exports ticked up fractionally, 278 billion. And you got a trade deficit when you subtract the two of 140.5 billion. That's a 14% increase. And yeah, people getting ahead of the rush, right? Yeah, so we got to wait until June to start getting some of the April data. Because March was when everybody was rushing. What's April going to look at? Are we going to see a drop off completely? And of course, that's factoring into the GDP, right? That GDP decrease had to do a lot with imports, which are subtracted from GDP. All right. And what do we got coming into tomorrow? We have a Fed day. Of course we do. Fed likely to hold interest rates. We were looking yesterday. Fed swaps right now at about a 98% chance. Rates are staying where they are, folks. What I find much more interesting, okay, and you look at yields, we're pausing the run that we have today, but you take a look at yields, there's no decisive move just yet. This market's right in the middle of where we've been, right? You were at 150 in September. You were at 107 in January. You were at 115 almost in April. You got as high as 114.10, and we're right in the middle of that range right now, sitting at 111, okay? But if there's going to be higher rates, if there's going to be higher prices, you haven't seen the dollar strength to go along with those higher yields, even on the bounce. Yeah, we have a slight bounce from 98 to 99.50, but these markets just trying to find their way, and we're going to get a lot of data coming down the line, whether it's April data coming down the line in June, etc. But the actual impacts of what's going on in the tariffs, the uncertainty, it's going to take some time to show its face in this economy. All right, let's jump around to some equities. Palantir out with their numbers. Look at this double top, right? Sometimes you don't got to be a genius, folks. Now, the worry here is you get your back against the wall, you get overnight risk, but yeah, that's a double top, and there you go, Palantir. What are we down? $18, 15%. You talk about some volatility on this equity, man. From $5 to $125, and we're going to get back about $12 on the open right now. Trading at $112 for Palantir. Ford out with their numbers, trading lower as well. We're down about 20 pennies to 9.92. Car company's been having problems as is, but nonetheless, Ford out with their numbers, trading a little bit lower this morning as well. Give me 1 second, jumping around to what else we have going on. Yeah, Celsius out with their numbers, recoiling this morning. So you're only down about 60 pennies. You jump over to this equity. All right, Celsius, how about an $8.5 billion company? Whew. The energy drink maker. Yeah, and they missed on revenue, $329 million, and the market was looking for $344. I mean, imagine some of these companies, right? You start a public company, you're taking in $329 million in 90 days, okay? And they're valuing your company at $8.5 billion. What's your revenue? You multiply that times 4, wow, $1.3 billion. So they're getting valued at 7 times revenue right now. If you know businesses, think about it, folks. 7 times revenue. Some of these companies, you got a lot to live up to. We're coming back, folks. We'll talk some more equities. We'll talk some Magnificent 7. We'll talk some tech stocks. Fed day tomorrow. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the S&Ps down 52 points right now. And yeah, just follow the volume, folks, okay? And what I'll say here is I keep saying it in Market Insights. I keep saying it on the show. If you're trading this market, I advise you to keep your stops tight. You know, yes, we get a lot of volatility. Yes, there's the potential that you get stopped out. But when you get the type of moves, man, right? Okay? And you're talking about here, let's put it on a 15-minute. You know, like yesterday, folks, okay? Coming into this high, it was a great area. And we actually went short in Market Insights. And, you know, timing can be everything. And we got fortunate, folks. It was at like 245. It was literally the QID. We were getting in, okay? At about, it was almost tick low, which is crazy. I know. 32.48, hit 32.47. But here's what I want to walk you through, okay? Is that, and we'll see, you know, and I was giving myself 70 pennies, folks, okay? And that's 1% in the NASDAQ. But as we know, 1% of the NASDAQ is going to be 2% the QID, okay, which for a $32 stock is going to be 64 pennies. It's that simple. But as you can see, the moves we're getting, okay? You're talking about a move. We're already $1.30 up. I was risking 70 cents on that. And it's not bragging, folks, okay? There's many times you make those trades, I make those trades, they move against you instantly. This time the timing was right. But I want to walk you through here, okay? On a 15-minute basis, let's go back to the Qs, because that's really what you're trading here. NASDAQ futures. All right, yesterday, it was right. We got it all back from where we were at 6 p.m. And that's what I was looking at. I said, okay, you know, you had the NASDAQ 100. Just trade down to 19,950, right? We've charged higher by more than 1%. And yesterday afternoon, the volume was, the writing was on the wall that the volume wasn't even going to be close. So you know what? We're at a 618 in the entire move. We're challenging the Sunday night open on the futures. We're at this consolidation area. I'm going to go for a short. Going to give myself a little bit room to the upside because, man, this volume is going to be light. And we are coming into Fed Day tomorrow. There's no conviction right now at this price level. We have a drop-off on volume for the last 4 days, right? And even those volume numbers are nothing compared to what we were doing when markets were really accelerating. And they actually don't even compare for this whole section of volume that we had. And look at these volume numbers, okay? This is why it's really hard for me when the market gets up to this price level right now to see conviction to the upside. Just being real, okay? The volume started on that first big day, February 27th, right? We get a little price action, we get a little volume action. We were above 21,000 to start that day, and from there, we did more than 694,000 contracts in the NASDAQ for how many days in a row? 5, 10, 12 straight days. 12 straight days, we did 694,000 contracts. Okay, people were getting ready for Liberation Day here, folks. They were. Look at the volume, right? Then things trail off until the actual day, right? And then the volume numbers are higher. But as I mentioned, 694,000 contracts. Folks, we've only done 694,000 contracts twice since April 11th. So in the span of a month, we've only done 694,000 contracts twice, and we did it for 12 straight days as this market began to trade lower. So there's a lot of volume to the downside when you look at that, right? And that's where this is coming from. So we got a fortunate execution yesterday, and we're going to try and let it run a little bit. Yeah, but keep your stops tight no matter what you're trading. I would advise you to get stopped out, do it again. And no matter what way you're trading in this market right now, we have volatility, and the volatility is going nowhere just yet. And it lines up on the other indices as well, right? That's not it. In terms of the volume basis. Same exact thing. Look at that volume. There it is, February 27th. Look at the volume the S&P did, right? Same exact thing. S&P did 1.9 million or more. How many days in a row? 3, 6, 9, 12, 13 or so. Yeah, 13 days in a row, right? I'm just going to square it up. Put these areas in your charts, folks, okay? 13 days in a row. We're talking about 1.8. Really, it began, right there to like right there. Talking about 3, 6, 9, 12, about 13 days. Really, the volume from February 27th to March 13th. Okay, we haven't done that much volume since February. Excuse me, I keep saying February. April 10th. And I know it's not a ramble here, but boy, this is what's driving me right now. Volume, okay? This was a huge setup in volume. This is going to be a tough area to get over. Where is this area? Well, this area begins at 6,000, okay, but it takes you all the way down to 5,500. That was a massive volume trade. Okay, there was a lot of selling, a lot of volume period on that move. And that's going to be a tough area to get through. And yes, it begins at 6,000. But then you look at the volume recently, and it's just a drop-off. And the NASDAQ is even more pronounced on the volume basis. All right, let's jump around to some of the Magnificent Seven, see how we're starting. Apple shares, tough day yesterday and continuing. Down about $1.50 to $197.50 right now. Amazon shares trading lower as well to $184 from $186. Microsoft holding up so well. Keep saying it. They look to be the strongest right now, man. You know, I love Amazon longer term, but boy, what Microsoft is putting out right now, the way the stock is behaving, it's down $5 today, but look at that chart coming off earnings, right? Meta shares, yeah, pretty strong as well. $5.90 from $5.99, but they're going to take a hit this morning. Jump over to Tesla shares, down to $272. All right, look at Tesla. Let's see what we got going on with Tesla. Yeah, right at this area. Tesla's in a little bit of consolidation, right? You're going to need some conviction there. Elon's back. Do we get another run? I don't know. There's a sign of strength the week of April 7th, that's for sure. We did over 885 million contracts. Now that's the 90-day pause, the volatility there. You jump over to NVIDIA shares, down about a couple dollars to 111 from 113. But we got markets at session lows right now, with the S&Ps off 1% as traders getting their trades in order ahead of Fed Day tomorrow. All right, folks, stay tuned. We'll come back. We'll take a look at some other equities digesting earnings. You got Palantir trading lower on the opening bell, down about $11 to 112 right now. Ford, they pulled their guidance, only down about 20 pennies. Stay tuned, folks. We're coming back with the opening bell.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry's been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the equities open, and you got the S&P down about 51 points, or 0.9%. Tech stocks taking it on the chin, down 1.25%, or 243 points, 19,809. And you got to take into consideration here, right, that is after you slid to negative territory yesterday, giving up all the gains. You have the NASDAQ 100 pushing 20,200. You gave up 200 points yesterday. We've given up 200 more. We're 400 points. We're 2% off of where we were trading at 3 o'clock yesterday, right? 2%. You got some volatility in this market, man. You jump over the VIX. Yeah, VIX 2486. Historical average on the VIX, you're looking at about a 16, and it seems like we've settled in a 25 right now. Yeah, not giving up all that volatility just yet with everything on the horizon. Fed day tomorrow. The chairman will have an announcement at 2 p.m. Eastern time. As in, the Fed will make their announcement. The chairman holds his press conference at 2:30 p.m. Eastern time, and we'll be live on the air. You can watch those right here at TFNN on our YouTube channel or in our Tiger's Den. Now, this is the swap market. Okay, so for tomorrow, yeah, there's a 96.8% chance by swaps that the target rate probability will be 44.25 to 4.5. That's where they are right now. Okay, they're going to leave rates where they are, market thinks. But when you go out to December, okay, this is what I find more interesting. Now, there are 5 meetings. I was talking about this yesterday, but I'm thinking about this one a lot right now because I think the market's a bit ahead of itself. The market's not ahead of the president, right? The president wants cuts. But take the president out of the scenario, and you can't take him out of the scenario. I get it, okay? But Chairman Powell shouldn't really be reacting to the president. He's been slow on the uptake on one side. I understand maybe the ability to cut once or twice right now, right? You could say, well, you know what? I feel like we're still a bit restrictive at 4.25%, okay? Because this is the conversation going on in the Federal Reserve, folks, okay? You're saying, and let's update that one, because we're at 4.33 as of this morning. What's the R star, right? The R star is the natural rate of growth in the economy. And ideally, the Fed wants an overnight lending rate that's somewhat near the R star, and you never really know what it's at. It's a theoretical number, right? You can't know exactly what it's at in this moment. You can only know in hindsight what it's at. Soft data, hard data, all of that stuff, okay? But if they match that number, do you really think the natural rate of growth in this economy right now is 4.33%? Ooh, I don't know if it's that high. We got a negative GDP, okay? You even take out all of the tariff pulling ahead demand, right, for imports that pulled out GDP. GDP's not growing at 4.33% a year, folks, okay? The Fed could make a very real statement that they're still restrictive. They could say, guess what? We're still restrictive. We're going to cut by 1 time. We're going to cut by 2 times. You start getting to 4 cuts, you bring their rate down, and that's where I want to have this conversation, okay? You bring their rate down to 3.25%, where we are right now, ooh, very hard to make the case they're restrictive. What if we have some price pressures? One sec as I jump around. Yeah, and so these are the headlines that you will see out there, okay? Prices are falling on some purchases. Economists say they're not here to stay. There's so many variables that are in play right now, okay? As in, you have this pull forward of demand. You have an uncertainty shock on consumers, okay? That's why airfares, in particular, right? You're seeing a drop in airfares. Now, we're going to talk about airfares in a second, man. Don't fly into Newark, New Jersey, folks, if you can avoid it. We'll talk about Newark. Man, this FAA. But Newark, whew, they have some problems when it comes to traffic control, air traffic control. But nonetheless, enjoy the lower prices because they're not here to stay. Now, listen, this is one man's take, okay? The president would disagree with this one for sure. He's talking about $1.98 gas. If Biden told you the gas was $1.98 out there, folks, I think a lot of people would be upset because gas is not $1.98. It's not bad, but it's $3 right now, about $3.16, depending on where you are. So there's the possibility that the prices are going to rise. And I bring that up as in you're talking about 3 to 4 cuts right now over the next 5 meetings. So take tomorrow's meeting out of the equation. The market thinks we got 3 to 4 cuts in the next 5 meetings. 3 to 4 cuts. Yeah. There's a 8% chance right now, 68.4 to be exact, that we get either 3 or 4 cuts by December. You take tomorrow out of the equation, and let's just assume the market's correct. That's a lot of cuts, man. Okay, so what's the possibility? Possibility is that the Fed says, no, we're going to cut like 1 to 2 times. Maybe we'll cut a couple times over the next 5 meetings after this one, okay? And what does that do? That causes yields to rise, which we've seen happen in the last 3 trading sessions off a hot jobs number, okay? And yeah, the data is going to get more important, but it's always been this case. If you were trading through COVID, right, what was always the case? The data is going to be good now, but we got lag. Lag's going to catch up, right? Or, we have inflationary prices now, but that's going to be transitory, right? There's always some, but wait for the data. The data is great right now. The Fed's not going to be cutting 3 to 4 times right now with the unemployment at 4.2%. We're adding 170,000 jobs a month. It's not happening. Now, that can change. But the other way to look at that, right, is if I gave you a midpoint, which is where the market is right now, that you're going to get 3 to 4 cuts this year, and that's the over-under. Okay, that's the way it works. That's the over-under if you're in the betting world. Okay? If that's the over-under, which way are you going? You think they're going more cuts? You think they're going 4, 5, or 6? Or you think they're going 2 or 3? I'd say there's a much higher chance we go 2 or 3. Here's the other side, the last part. If they ever have to go more cuts, okay, because all those cuts are priced in right now. So if you don't think we're getting all those cuts, then you better be careful in terms of where you go in terms of that market, because you're talking about, I'd say there's a high probability that if you do get more cuts, right, the economy is going to be in trouble, and that's not going to be a good thing either. But if you get less cuts, that's just going to mean the economy's doing fine, but we're going to deal with higher yield potentially. I think it's one of the problems that you're potentially facing out there. And if you're dealing with higher yield, though, that should come with dollar strength. But this is one of those areas that I think the dollar is experiencing a little bit of a problem with demand. But nonetheless, you got dollar weakness backing away from 100 yet again. Until it breaks it, folks, that is a critical price point of 100. But yeah, I find myself going over it. It's happened before. We've seen it happen. These moves in the 10-year, just mammoth. Yeah, and they don't look big in the context of that COVID move. But you're talking about a 7-point range, and we do it every 6 months, right? 7 points in the 10-year is mammoth. But guess what? This market keeps getting ahead of itself on one way or the other. And I think right now it's ahead of itself, thinking that this Fed's going to cut 3 to 4 times in the following 5 meetings. And if it is ahead of itself, right, what does that mean? That means too many cuts are priced into this market right now. And that means that when the market reprices those cuts out, as it's done since Thursday, you're going to see yields rise, which is a possibility out there. All right, folks, stay tuned. S&P's off by 42. We'll keep talking about this conversation. What about a surprise? 50 basis. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. You have a little bit of a pop on the open right now. Market just popped about 15 points on the S&P. You got the NASDAQ 100 down about 1%, down 200 points, 19,856. And great conversation in the den. Manny Kies, he's saying, what happens if they come in with a surprise? Okay, now they can do anything, right? We got 5 meetings after this meeting. Okay, market's pricing in 3 or 4 cuts. If the Fed ever feels the need to come in with a surprise 50 basis point cut, folks, you're going to see this market freak out to the downside. Freak out to the downside, okay, because they think there's a massive problem that they need to stimulate this economy, and the tariffs are a big problem. Market hasn't said the tariffs are a big problem just yet, okay? All we're doing is trading back to where we were basically just prior to the election. Think about that, okay? You're trading back to where we were, folks. Yeah, in the middle of September. That was, 6 weeks before the election, right? There's a toss-up. This is not what a complete economic meltdown looks like in any way, okay? So if you're talking about surprise cuts, you're talking about the market, man, you could see decimation if you ever need the Fed to come in with that way. What you really hope for is that they come in ever so slightly, right? That the market is just handling things well. They come in, but here's so you say, well, what happens if? That's a great point. What happens if things start to pull back? And that was what was EKS saying. Well, what happens so if you get a trade balance surge, you get the tax from the tariffs hit, and the economy slows down, and they need the rate cuts? Okay, great point. But here's the tough part about this equation, and this is the one I find myself wrapping my brain around trying to. If you're trying to game out the theory, and this is good, you should be, right? And then it's like a chess game. Okay, then you make this move, and how do the dominoes fall from there? And listen, this is the fundamental side. You pair it with the technicals. That's the way I like to do it, okay? But if the economy is in such dire straits, and let's just say it's not even dire, right? Let's just say that they're getting impacted, the economy is getting impacted, and the Fed needs to come. It's double-edged, because if the tariffs are impacting the economy because they're slowing down demand, because why would they be slowing down demand? Well, they'd be slowing down demand because of the prices of the products, right? Prices would be rising. It would hurt demand. Everything would be expensive. You'd be paying taxes. That would cause people to pull back their spending. It's difficult for the Fed to step in that manner if part of the reason why there's an economic slowdown is because there's a tax put on products that's causing consumers to feel like things are more expensive than they should be, and they're pulling back. See how that goes double-edged? It would almost, and so that's what they're going to deal with. And I know it gets political, okay? But that is why the Fed is being so cautious, rightfully so, okay? You can't just cut into an atmosphere that the economy is pulling back because of policy decisions for taxes. It went the other way, man. You know, when inflation was out of control, everybody was saying that the Fed can't solve this because the policies in Washington are what is causing the turmoil. The Fed is going to look in the same manner, okay? And that is the problem when you talk about the cuts. If the tariffs and, you know, uncertainty is one part of it, okay, that doesn't have to deal with rising prices. There's a lot of uncertainty that's causing some of the angst right now. But the other part of that is the straight up price costs. And if they're there, you're going to have price increases. That's going to, folks, it's modern economics, okay? Straight up. You increase the price of something, it decreases where demand and supply curve intersect. That's it. Do you remember Econ 101? Yeah. And guess what? You might make more money on certain products if that's where you want to be. But there's a demand curve and there's a supply curve, folks. Okay? And you push the product higher, and guess what? The demand curve is lower because that's how humans work. So no matter what, you're going to face this obstacle going through the line. Okay, now let me find where I am. Because let's talk a little bit of the FAA, man. Where are we? There we go. Boy, there was a great article from Bloomberg last night. I'm going to find this Bloomberg article, folks. I was reading it last night. Newark Airport. When's this one out? This one's out at 5:30 last night. Probably references the Bloomberg article. Newark Airport lost air traffic control for 90 seconds last week. I think it was last Friday. 90 seconds. Folks, I can reboot my desktop computer quicker than that. They have no fail-safes whatsoever in Newark. They had planes flying for almost 2 full minutes with no air traffic control ability to monitor planes. So yes, they have a big problem, and it goes down the line. It's been there for a while. I mean, this article, how about 2003? Congress directed the FAA to modernize its systems. The next-gen overhaul is going to be completed by 2030. And this is why government drives people crazy. 27 years to update our computers for the FAA, right? Floppy disks. I remember floppy disks because I'm old. 76% of the systems are unsustainable or potentially unsustainable. But this one, man, you know, and I'll find the article. They need 3,000 controllers to be fully staffed. You're talking about 90 seconds of no activity. It shouldn't be allowed to happen. They need a fail-safe. They need something. But Newark in particular, man, I'd be careful flying in out of Europe, which is a real, which is an unfortunate thing to have to say, to literally for safety-wise. Think about staying away from one particular airport. Pretty remarkable. All right, let's check out some of the companies with their numbers. Palantir, down about 12%. We're down $15. You trade lower on the open. Yeah, look at that, down. And this is where when you're dealing with multiple compression, folks, it can go quickly. Yeah, down $15 or 12%. Ford, they dropped their guidance. Look at that. Look at that. So they dropped their guidance, and the market says, yeah, we get it. How could you ever provide guidance in this type of a market? Up by 1.3%. DoorDash, down by 7.6%. They come out with their numbers. Now, this one. Check out this one. They're on a $5 billion buying spree. Yeah. Deliveroo, 2.9 billion pounds. I'd be careful with DoorDash, folks. And I've been saying for a while, they've had a heck of a run. Okay? Look at this run. Right? From $50 to 200. But boy, you're coming into a tough area here for the COVID highs. And what I don't really understand, okay, is that, you know, Uber I love. Okay, and look at Uber, right? You look at Uber where it was in 2021, where you're at $60, you're pushing 85 now. Ride hailing is changing the way we travel. Okay, it's going to be around forever. Uber is now a word. It's a verb in the English language. Let's Uber to the party. DoorDash is a luxury. Okay, Uber Eats is a luxury, and it is an expensive luxury. And it's something that, man, it is, you know, Dash has to compete with Uber, and Uber gets to subsidize their business through ride hailing. And all DoorDash is restaurants. And I'm telling you, folks, I think eventually we're going to get tired of paying the types of fees you're paying on restaurants. Maybe it's the inflation. Hasn't happened yet. But boy, I used to do it all the time, and it drives me bonkers now because everything is so expensive and you're paying so much money for those delivery food services. Stay tuned, folks. DoorDash off 7%. We'll come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Folks, and that was a little head fake on the open. You got markets dropping again. S&P's off 1.15%. NASDAQ 100. Look at that head fake, man. We just dropped more than 100 points in the last 15 minutes. We're off 1.5%. You get the Dow right now off 1.1%. The Russell off by 1.5 as well. Back to DoorDash for a moment. So they come out and they're buying, is it $5 billion worth? Yeah, $5 billion worth. They're buying Deliveroo, okay, for 2.9 billion pounds. And then 7 rooms for $1.2 billion in U.S. Okay, that works to $3.9 billion for Deliveroo in U.S. and $1.2 billion for 7 rooms. When you combine the two, okay, and Deliveroo, 40 countries. You're talking about international. DoorDash already commands 2/3 of the food delivery market in the U.S. This company, it's feeling like it's getting a little toppy right now. Okay. The two companies, when you combine, you're talking about DoorDash and then Deliveroo, gross order value of $90 billion last year, 50 million monthly active users is how they do that. To facilitate, this is what I want to get down to facilitate the Deliveroo deal, they're taking on a bridge loan, okay, of almost $3 billion. They had $4.5 billion in cash at the end of last year. And yeah, it's a strong number. DoorDash, gross order value, $23.3 billion to $23.7 is what they're looking for there. Total revenue for the quarter was $3 billion. Net income, $193 million. Okay. This company is valued at like $80 billion, folks. And they're growing through acquisitions. And I'm going to post this one in the den. There's the headline from Bloomberg. Newark Raider failure left controllers blind for 90 seconds. Shouldn't happen. Hopefully they get it fixed, but be careful in Newark right now. They got a big problem in Newark. Markets trading lower. Stay tuned, folks. Basil's coming up next. Live programming after that. Have a great Tuesday, everybody. We'll see you tomorrow.